Hi, I'm John Prasinos, Editorial Director of Investing Daily. Welcome to my video interview with my colleague, Jr. Jimmy Butts. He's the Chief Investment Strategist of our premium trading service, Top Stock Advisor. With the markets showing extreme volatility and in downward momentum since the start of January, now's an opportune time to tap the expertise of Jimmy. As the title of his publication suggests, he's an expert at picking the top stocks in the market. Jimmy, thanks for joining us today.
Oh, thank you, John. Thanks for having me.
You bet. In early 2022 so far, the major indices have all taken a tumble, with the tech-heavy NASDAQ getting clobbered the worst. Rising interest rates tend to hurt growth stocks. Jimmy, explain that dynamic for us.
Sure. There's likely a lot of factors at play, but the most simple way to think about it is when we make an investment, we have to think about risk. We're putting our money at risk, and in return, we expect that money to make us some money. So when interest rates are low, it sort of pushes us into riskier investments if we want to earn a decent return, because the money sitting in our savings accounts or T-bills isn't offering much of a return. But when rates rise, we can now find decent returns with lower risk. So folks then have to ask themselves, if I can get a comfortable return and I don't have to lay awake at night wondering if my mega growth stock that hasn't turned a profit yet is going to drop by 30% tomorrow because it missed earnings, is that worth it? So with higher rates, we no longer have to wait for the projected growth to materialize, which means that future growth in those growth stocks suddenly gets discounted and are worth much less. From the academic side of things, interest rates and time are your two variables when calculating net present value. So when rates go up, the present value of money goes down because you can invest less money today to get the same amount you could get by investing at a lower rate. Hopefully that wasn't too confusing.
No, not at all. As usual, you were quite clear. Do you think we're on the cusp of a correction or maybe even a bear market?
I do, and we're kind of seeing a little bit of that right now. But as I explained to readers of Top Stock Advisor at the beginning of January, there's a long history of market corrections after the Fed turns off the printing presses. And we just went through the biggest monetary expansion in history. So I'd expect we could see, and we are already seeing, major turmoil in the markets.
Okay, well, what are some of the positive underlying factors in 2022 that should give investors hope? I mean, is there any sort of bull market thesis out there?
Well, I think there's plenty to be optimistic about, despite what I believe will be a pretty tough year in the markets. I know rising rates has some folks worried, but higher interest rates means that we can hopefully make a little bit more money in any cash laying around in savings. From an investment standpoint, it's great for financial institutions and insurance companies because even a small uptick in rates can provide a nice boost in profit as they now can get a better rate of return on the astronomical amounts of cash they have laying on their books. Other positives that I see, we have a relatively strong overall economy. There's more jobs than people. Housing is still strong. And best of all is if we do see a major sell-off, then we do have an opportunity to invest in some wonderful companies that will be trading at even better prices.
Well, surely investors can still find reasonably valued growth stocks, even tech shares, if they know where to look. Which growth segments still hold appeal to you?
Yes, absolutely. Look at Alphabet, the parent company of Google and YouTube. It may not be the sexiest investment and probably won't score you many brownie points at the next cocktail party. But here's a company that continues to grow sales at an impressive clip. I think it'll be around 40% when they release earnings for 2021. And it makes a boatload of cash. We're talking about over $70 billion in free cash flow. And it trades for less than 22 times the next 12 months earnings, which is well below its 5-year historical average. And there are a number of growth stocks that will be very appealing once the dust settles.
What are your favorite sectors right now under current conditions?
I think there's a lot to like about the energy and mining sectors. Even though energy had a banner year last year, but there are still some names with great financials and great balance sheets that are still trading for cheap.
What criteria do you apply to pick a top stock?
Well, the vast majority of my recommendations are going to be just your run-of-the-mill great companies that consistently produce a lot of cash flow and are trading at fair prices. I try to keep it relatively simple and try not to overcomplicate things. I do have a section where we will take a flyer on a small growth company that may not be profitable yet, but really the goal is to provide a portfolio that'll fit just about anybody's needs, and with the goal of growing and building your wealth. And I think we've done a pretty good job of that.
Thanks, Jimmy. That was a very instructive discussion. I appreciate your time.
Thanks, John. Appreciate it.
You bet. Jimmy Butts just provided you with invaluable investment advice. He also has put together a special report, 7 Shocking Predictions for 2022, and how to profit from them. To download your free copy of Jimmy's report, visit the URL that you see right now on your screen. Well, that does it for today. I'm John Prasinos, Editorial Director of Investing Daily. Thanks for watching. Stay invested and stay safe.